switched over to raising age.
All right, gentlemen, we ready to go? Gentlemen, ladies. Coming in. Leave this open. All right. So I think we got two groups in here, right?
Yep.
Cool. It was great. I think a lot of some familiar faces, but a lot of new faces, which is awesome. Excited about that. I'm Brandon. I'm the head of strategic partnerships for Tribevest. This is Seth Bradley. He's our chief legal officer. And we're here to talk a little bit about fund of funds and how we partner with great partners like Aspen and Lone Star and others to help make it easy to create a fund of fund and ultimately raise capital for their deals. So just to kind of get started, just curious, like familiarity in the room. Have you worked with Tribevest? Have you created a fund of fund before? Have you raised capital? I'd love to kind of just go around, just quickly do a quick share around who you are, where you sit, what you do, and just really specific to in terms of raising capital, what your past experience has been. So I'll start with Amir.
Yeah, hi. So I'm for Tribevest. I've got more of an investor experience.
Okay.
I'm an investor in funds of funds. I'm in commercial finance and brokerage, and I've been recently moving into the capital raise space. So
awesome.
Forward to this conversation.
Cool. Hi, Marshall.
Hey, I'm Marshall Sykes, and I have set up a fund of funds with y'all for the private credit fund.
Sure.
I haven't launched it yet, but we're getting there. So I've done that. I've also had fund of funds with single purpose vehicle or whatever it's called. But
outside of Tribevest.
Yes, outside.
Let's note that.
Yeah. And investor.
We'd love to talk about that for sure.
And passive investor here
and
too.
Passive
so
investor.
great,
Yeah. Cool.
My name is J.C. Hearn. I'm pretty heavily involved in commercial brokerage. I've also done 2 SPV fund of funds with another attorney. But Seth has actually taught at another mastermind I'm involved in. He has great knowledge on the subject. I've been very impressed.
Awesome. No, would love to. I think that's already identified like a really cool topic is what it's like to set up a fund of funds without someone like Tribevest, and would love to hear that kind of feedback and describe that. That's awesome.
I'll offer my experience and feedback, because it isn't. So I find that customer service is different, right? With different. I mean, even different attorneys and different organizations, and it's really important, especially when you're dealing with all the other things you have to deal with as a fund manager, right? Like having somebody answer your questions in a timely manner, respond back to investors if they have something that's specific to them, and be able to get answers is important.
100%. Love that. Hi, Jeff.
Jeff McKee. I've done about 20 syndications, like co-GP model, syndication pro, that kind of stuff. Then a couple of years ago, I did fund to fund. So Kelly Clark. So I went through Duke and Kelly's office because that's who we use on the multifamily. So I used him for a fund to fund for the ATM Ponzi scheme. So I unfortunately broke my teeth in on that one. But yeah, so I have a limited experience with fund to fund, but most of it, on the co-GP model.
Love it, man.
Love it.
My name is Harrison Woods. I haven't used the fund to fund model yet, but I'm sort of very interested in seeing what your services offer, because I would really want to make sure that what I'm in front of people is having a one-stop shop when it comes to that instead of bouncing around. So I'm looking forward to hearing.
Casey Stratton. We got a talk down in Phoenix at Tribevest.
Yeah.
Or RaceFest. But no, I've done co-GP historically. Right now we're just solely raising for our own deals, but we're looking at being fund of fund for some of Aspen's offerings. So excited to cut our teeth on that.
Cool.
Awesome.
Yeah, I'm Tori, new partner with Casey here, so same as Casey. But look forward to learning more about this.
Awesome. Real quick. Put you on the spot. Capital raising experience.
I'll go for both of us.
Yeah, you go.
Excellent.
Steve Navy, Jake Freer. We've not done fund of funds. We've done co-GP syndications, multifamily. we've considered doing fund of funds, but just haven't found the right deal, the right situation yet.
Cool.
Rob Stanley, China Rock Equity. Let's see, we've been introduced to Tribevest through a Lone Star deal, and then also the Aspen deal, private credit, and we're in the midst of a raise right now, and should be wrapping that one up here in a couple of weeks. This also Tribevest.
Awesome.
So this will be our freebie.
Good to see you in person, Rob. Hi, Tim.
Seth's been a great help too. It's a great team.
Thank you.
Tim Mai, I don't know who Tribevest is actually.
Oh.
Just kidding. We worked with them a number of times. Yeah, so I've done co-GP, I've done fund of funds, and I have a whole group of fund managers. We use Tribevest. You know, the biggest, I would say, because the biggest benefit of working with Tribevest is the investor relations. We actually like that part the most. Not relations, onboarding, the investor onboarding. So, you know, we're out here raising money, right? And then so once the investor filled in the soft commits, Tribevest team reach out to them and onboard them, getting them through all the subscription agreements and sending in money and all of that. And so yeah, we like that a lot about what you guys do. It's a huge release of burden from us to do that. Yeah.
Well, hey, Stephen Rita, I'm here local to Austin. Single families, got some LPs for myself. I'll be doing my first fund of funds with Aspen for their credit stuff. I'm sure we'll be talking about there too. That's what I got here.
Great.
I'm Luke Hemanover, Driftwood Equity Partners. We're local here as well. Co-GPs, multifamily syndication, that's been our model. And I'm intrigued very much so by fund of funds. I'm not entirely certain what is the dollar amount that justifies funding funds.
Great question.
Because we're by no means a big hitter in this point, but we hope to get there.
Love it. Great question. Love it.
Aaron Thomas, based out of Phoenix. Fund of fund manager. What I have done with Tribevest has been great. I mean, they make everything just so easy. It's really, you know, all that back end stuff that, I mean, is a headache. They take care of, and it makes it as streamlined as possible. So, yeah.
Ian Drew, Australian living in New York. I'm an ex-lawyer and banker. I used to do a lot of SPV, kind of cross-border investment transactions. Been working as a multifamily operator for about 3 years, syndications only to date. I'm part of Tim's mob, so he's been preaching the virtue of fund of funds. So I'm looking to go in that direction as well. So in time, hopefully sooner rather than later, I'll probably be reaching out.
Awesome. I love Tim's mob.
And the
I like
virtue
that.
of fund of funds. The virtue of fund of funds. I like that too.
I like that. Cool.
It's good.
Awesome. Thank you all. I appreciate all the context. I think we've identified a couple areas we can focus on and talk about. I think, so our Tribevest, little context, we launched in 2019. Originally, our platform was focused on joint ventures. So how do you seamlessly come together as a group and invest in whatever you wanted? So very broad, very diverse. And what we created was a platform where you can create an LLC, open a bank account, have a templated operating agreement, and come together as a group and invest in whatever you want. So this is 2019, just for context. And we built thousands, 3,000 plus of these tribes. And we learned a lot, right? How do you bring people together to invest? And how do you make LLCs and banking alone? Anyone that's gone out and just like tried to go, hey, I've got an LLC and I want to open a bank account at Chase. You know, like, can all of you come down and sign something? Like, you find out pretty quickly how challenging a lot of that stuff is. And that's legal not even really incorporated yet. And what we found is a lot of those groups were doing all sorts of things, right? creating groups to invest in a family vacation home, a rental property, but a lot of them were investing in syndications, right? Like we can't meet a certain threshold on our own, but collectively we can. So with that came, okay, well, what happens when people invest or groups invest in syndications? Well, they need, distributions are coming back. So we need to have a cap table. We need to be able to break that up and push that out to individual investors. What happens? Oh gosh, K1s. Well, K1s are coming back. Well, what do we do with these K1s? Okay, well, we need to have an accounting group that can break those up, push them out, and deal with individual investors. And this really positioned us well to come into the capital raising space as we saw that simultaneously emerging over the last few years. So the Tim My Mob and others that are out there, right? There's lots of groups, masterminds, people talking like capital raising, right? There's an opportunity to raise capital. You're a savvy LP, and now you want to grow. And the syndication, being a syndicator or an operator, that's a pretty big leap, but maybe you can raise capital. So we saw that there's kind of these things happening. And so the fund of fund, and so the other thing that was happening is that in talking to a lot of our leads, we started partnering with lead sponsors, people that had the target deals, Lone Star, Aspen, et cetera. And what we found was that they wanted to leverage this space, but that there was lots of barriers because it's, oh gosh, like to do it compliantly, right? So people were doing it in a non-compliant way because they just, gosh, someone's got $1 million and they can raise investors. Well, there's all sorts of gray areas emerging. So what we realize is that, well, what if we can take our experience in our back office and leverage that to make this as turnkey as possible, but still in a compliant way and do it affordably, right? And so, and meet a lot of these emerging capital raisers where they are. And so we launched this almost 2 years ago now. And we've done 150 plus fund of funds. We've worked with 45 plus lead sponsors. And we do everything from entities. So all, again, that experience we had from 2019, entity formation, opening a business bank account on our platform. Now we added Seth Bradley, our chief legal officer, creating the legal documents for the fund of fund. So that happened. That was a huge leap for us 18 months ago. So being able to create a full set of offering documents for a fund of fund or fund manager so they could do this compliantly, right? And what we realized early on is that partnering at the lead sponsor level was critical. So why are we here? Why do we love Lone Star and Aspen and SAM and PAVE and all these groups? Is that the more we can solve and figure things out upstream before the fund manager shows up and says, hey, I think I can raise $1 million for you, the better we all are. That's how we streamline these things, is we figure this stuff out up front. And then when you say, hey, I think I've got an investor network and can raise $1 million for you, they're like, great, we've got a program. And these are the next steps. We need you to do X, Y, and Z. And then I'm going to introduce you to Tribevest, and they're going to handle all the back office aspects for you. And they're going to do everything downstream for the life of the deal. So all the way through to dissolution, they're going to manage distributions. They're going to manage K1s. So basically all the stuff that as a fund manager you don't want to do, we're managing for you or in conjunction with you, right? It's still your responsibility. We're working with you, but we're taking a lot of that stuff off your plate. And so that was our go-to-market strategy. And what we found is that, this was the way to really kind of help people scale in this world. So there's two cores to our business. One is we want our lead sponsor partners to be able to, again, Lone Star, Aspen, we want them to be able to create a stable of fund managers that they can tap to raise capital for them. And we also want our fund managers to be able to stack deals and be able to create a business out of this. So whether this is, part-time, you're doing 1 or 2 deals, or maybe there's literally people here that have done, I think, 15 plus deals with us, and have really created like a meaningful business out of this because it's, again, streamlined, it's efficient, and it's affordable. So that's our goal as a company. Any kind of questions there, any questions there or thoughts to start with? Any?
Well, you talk about the offering documents that's worked on. Does it have all the regular disclosures for you as a fund manager to your investors so that they don't have not a lot of ability to come back and sue you or whatever?
Yeah, I mean, that's part of the magic, right? There always has to be a target deal. So we're working in a fund-to-fund space. That's why it doesn't work with the target deal. So we don't offer our services for the lead sponsor because the risk disclosures are very specific to the asset, to the geography, to the deal itself, right? There are very specific risks and disclosures you have to put in your PPM. But at the fund-to-fund level, we actually leverage the target deal risks and disclosures because that's the asset. Like that's the asset that's creating the risks. So the only thing we have to put in the fund-to-fund documents as far as risks and disclosures are, hey, these are the things that could go wrong because it's a fund-to-fund specifically. And then on top of that, go ahead and check out Exhibit A. It's the PPM for the lead sponsor deal. And they have all their risks and liabilities there for their asset listed there. So we leverage their risks and disclosures.
Okay.
I know some people said that they had created a fund-to-fund outside of Tribevest. I'm just curious if anyone that mentioned that could talk a little bit about their experience or if it was good or bad or the challenges doing that, because I think that's important to highlight if
Yeah, I
you've
mean, I
done
had
it.
to set up, 2 LLCs, the investor and then the manager, 2 bank accounts, and I got the bookkeeper, I got the CPA, the overhead, just to pay for the PPM and OA was pretty high.
Right.
There was no offset from a lead sponsor. So, you're doing that deal yourself. You've got to, do the K1, you've got to send, to the lawyer, hey, here's what I think the split should be. Then you send it to the CPA, they say, okay, fine, we'll generate that K1. Then I use Syndication Pro on the back end to do distributions before things went south. So then I would send out the distributions through that. Then I had to pay extra because you're doing distributions, ACH, that kind of thing. So you as the, the fund manager are doing all these other back end things. So there were multiple things. It wasn't like a one-stop shop.
Sure. And was it, just out of curiosity and I don't put you too much on the spot, was it cost effective based on the amount of capital you raised and how the whole deal went?
It would have been.
It would have been based on the projections, I guess. Yeah. It still would have been. Right. So we always say so that's a good context. So we always say that, prior to Tribevest, if you weren't raising $2, $3, $4 million as a fund manager, it probably wouldn't be cost effective to go find your own attorney, open a bank account, and do all this work. Now we feel that we've lowered that bar to about $500,000, right? So again, we're trying to meet, there's the different communities out there bringing new capital raisers into the market, that at $500,000 as a single fund manager, this can be a profitable venture, again, based on the projections of the deal. And that's another important part here is, and I'd be curious to get your feedback on this as well, is we always work with the lead sponsors. So what's awesome, like Aspen and Lone Star are exceptional at this, is put together a fund-to-fund economics calculator for your fund managers ahead of time. Spell out exactly what this looks like based on the projections. Just like when you're talking to an investor or an LP, hey, well, what should I expect? Well, here's our projections and our pro forma, and this is what you can expect based on projections. Same thing for a fund manager, that, hey, if you raise $1 million, you're going to get access to our XYZ share class. and that you're going to get this preferred term. So what we recommend is that in turn you offer XYZ terms to your investors. You can charge this upfront fee. So you're making some money upfront for the work you're doing. You can charge an ongoing fee annually to cover your cost and your expense. And then everything else is basically based on your GP/LP promote that you're going to get on the back end. But you see that beforehand. So you're not left to kind of figure this stuff out on your own. You are able to tweak this, right? So Lone Star, Aspen create an example for you and say, hey, this is what it looks like. And you're like, wow, that seems, so one, it's an awesome opportunity because you get to make an informed decision. We all know everything's based on projections. That's the world we live in, but you get to see it spelled out for you like, oh, okay, like if I raise $1 million, I can make 12% of what I raise based on these projections. Is that worth my time and effort? Yes, cool, I want to do this. Versus like, oh, we're going to give you this preferred share class. And depending on your, some of you guys might be spreadsheet guys. I'm not myself. But if you don't have that skill set, it's very difficult to determine like, well, what is this? How is this all going to unfold for me? So we work with the sponsors to figure that out up front so you get to make an informed decision. And then you say, okay, great. And so you're saying, yes. And then, by the way, we're going to help you with, all your ongoing distributions, K1s, and things like that. And our pricing is, it's generally speaking, $5,000 up front. So that's your entity, banking account, and your offering documents. Blue Sky filings included as well. So we manage all your Blue Sky filings. We just pass those through whatever the fees are from the state. That's really the only variable in our pricing. We charge $2,000 for up to 10 investors. That includes distributions, K1s, the use of our platform, the account manager. It scales up based on the number of investors because there's just a hard cost to do the accounting and to execute on those K1s. So all of that stuff's figured out up front. And what's nice, again, is that we don't charge for assets under management either. So the more you raise, the more you can make versus we're going to take a percentage of that. So that's a pretty nice upside at the moment as well.
And as Tim mentioned, onboarding the investors, right? Because that's a pain in the ass. I mean, it is. Like that's typically your first hire. If you're building a company in this space, is an investor relations person, right? So we're doing that. Like we are walking them through signing the documents, herding the cats, getting them through all that, getting them to wire their funds. Like we handle all of that. So like a lot of that value kind of gets swept under the table sometimes. So I'm glad that Tim brought that up because that's a big piece.
Sure. We're not closing your investors for you, but again, in terms of sending out the documents and getting them to sign and doing that account management work, that's included, which again, huge value.
That's crazy. So the 2,000 a year for up to 10, that includes like the 1065 and the K1s, like tax return.
Yep.
And are you guys doing the waterfall calculations for the distributions according to the OA and cap table?
Yeah, and it's pretty simple, right? Especially at the fund-to-fund level. That's why we can do it. You know what I mean? Like it's not like at the asset level where you've got a million different expenses and all these different things you got to factor in. It's we get distributions from the lead sponsor, 1K1 to your fund-to-fund entity, and then we split that up according to the cap table. And we try to keep it pretty simple with the waterfall. We limit what you can do there. But it's going to handle, what we offer is going to handle 95% of what you'd ever want to do anyways.
So again, back to the lead sponsor partnerships, is that we've already figured out with Aspen, Lone Star, et cetera, we have 45 different lead sponsors we've worked with to date. Again, Lone Star, Aspen, the very, very tip top of those partnerships. But we figure that out ahead of time. And there is a box, right? So we do keep it simple. It's not like, hey, I want to do this X, Y, and Z. Like we create a really nice example. But the nice part is that based on that example is that you can project and see what the opportunity looks like based on the underwriting of the deal.
And so then, we have our own offerings, our own investors. We use Appfolio for our portal. Then if I have investors that then go into a new fund-to-fund thing, they would have another portal to go to.
Yeah, they would. That would be our portal. Yeah. Yep.
So
how does that compare to like Appfolio? Is it pretty much the same functionality?
Right now, it's we like to call it a dashboard because it's pretty simple. There's some folks in here that are clients now. It's a simple dashboard, does the job, especially at a fund-to-fund level where it needs to be simple, and it is. But we are actually finished a successful seed round raise for our company, and we're building out a brand new software. Internally, we're calling it Trident, but it should be rolling out by the end of Q3, and it will be right up there with some of the best of them. But we're keeping it simple because at the fund-to-fund level, it needs to be simple. That's what you guys want. That's what it's going to be, and it's going to be fund manager centric. So it's not built for the lead sponsors, right? Like lead sponsors, you look at like InvestNext and some of these other ones. It's got a lot of things that you just don't need at the fund-to-fund level. It's built for the lead sponsor, and then you try to maybe fit it in there as a fund manager. But ours is built fund manager specific. And that's another thing we want to get feedback today from you all on what you might want to see in that build out, because we're in the beginning stages and we're still able to influence what that's going to look like.
So yeah, love feedback for sure for any of you guys using existing portals. But yeah, it's going to be fund manager centric. Our partners are going to be able to come in and create a lead sponsor deal specific page that you can then leverage as a fund manager. Here's all the marketing materials, here's all the offering documents, and then you can, obviously soft commit, wire funds, sign docs. So all the things that are kind of typical on an investor portal landing page will have, but it'll be specific to our partners and just very turnkey. And again, a lot of the stuff you don't need, and frankly, a lot of the costs that probably you don't need to be paying as well, because those tools were created for lead sponsors and operators. Mm-hmm.
So do you have an accredited investor link through there to where they get verified by a third party?
We will.
Okay.
We will in the new dashboard. Yeah. I mean, but for now, kind of our white glove experience that we're talking about, we collect those letters on your behalf.
Right.
Yeah.
Is there anything that you guys aren't doing that we would need to plan on doing ourselves?
So I'd say the only element that a fund manager is responsible for, and then again, because we have these existing partnerships, is the ongoing communications. So that's whatever quarterly, monthly updates. The lead sponsor has whatever they're sending out. And again, because we have this partnership, we communicate with with them up front, is they're going to provide you with something that you can take. And it depends, right? How specific that update is. So if it's general, you can probably just, hey, things are going great. If it's more specific and you want to rebrand it, like, hey, I'm XYZ Capital, and so I want to rebrand it as my own, and then maybe you're switching out slides 3 and 4 that are that tied to the terms of your fund-to-fund versus the terms of the lead sponsor's deal. But pretty minor.
Yeah.
Considering
like the marketing skill, the marketing and sales and communications, right? Like that's on you guys. That's why you're in masterminds and things like that, so you can figure out how to put your email templates together and find new investors and talk to them on the phone. Like those things, obviously, we're not going to do. But as far as like the back office stuff, like we handle everything.
Yeah.
We also have to set up our own manager account, though, right? Bank account. You don't do the bank account.
I think
for the manager.
Oh, for the manager, right. For Marshall Capital,
Right.
Yes.
We will.
One day, yeah. So we have a full bank. Like it's pretty unique. Like our platform has a fully integrated business banking system, which again, not to get too far ahead of things, but that's going to open up a lot of opportunities with both our lead sponsor partners and with fund managers down the road to open up, your own accounts, to have, again, potentially, our lead sponsor partners operating through our business banking system. There's lots of things that will make all of this potentially more automated and turnkey, but that's all TBD.
So if you just have the one bank account and you're holding back some pref, you're holding back, some terms as the manager, is it all in that one account and you just have a balance and then that goes to the manager entity, or how does that work? Like,
How does the manager get paid?
like if you're getting from the lead sponsor 9% pref and you've agreed to pay out 8% and that 1% goes into that same account, normally that would go to a manager account, like you would transfer it. And so all that compensation to the manager, you keep separate from the investor only account.
Yeah, I mean, it's all in that same account. I mean, you have control over that account as well. So like if you have your own manager account set up and you want to transfer that over, you have the flexibility to do it. It's really up to you.
Okay.
Yep.
Yeah. What about expenses? So if you pay the $5,000 to set up an account, can those expenses be paid out of the distributions to that $5,000?
Like prior to,
Is the
yeah.
PPM or is the SPV show that?
It does. It does. Yeah. Our template of documents, you have that language is in there that all expenses are charged to the fund. So, most fund managers don't have that many expenses, but certainly, I mean, you could, right? Like you could like traveling to this event, right? Like that's something you potentially could, it just depends on how you want to categorize it. But yeah, you have that flexibility.
I'm trying to think what else I noted here.
So just to reiterate,
Yeah.
if I pay up front, it includes the Blue Star filings, that depending on the state, right?
Yeah, Blue Sky.
And then on top of that is the 2K for up to 10 investors per year.
Yep.
So what level of visibility do you have with the onboarding for those first 10? Like, you walk them through a little more in detail, like what happens there, and what visibility we have with the account management team to making sure things are properly signed.
Yeah, I mean, right now it's a lot different than it will be once we roll out the new platform. But right now it's the white glove kind of account management services. You can be as involved as you'd like to be. We'll put it that way. Some people will just send us a list, right? You just send us an Excel sheet of your investors that you want us to reach out to. We'll send them the documents, get them to sign, get them to wire, get them to do all those sorts of things. But on the other end of the spectrum, if you want to have those communications with your investors, you can obviously do that. So you're copied on all the email exchanges we use Monday as a project management service. So right now you're invited to that board so you can kind of see like what stage each investor is at. You can see if we've got your EIN letter. You can see if we've opened your business banking account. You can see if we've got your documents drafted, and you can download your documents from there, those sorts of things. Yeah.
So you use like DocuSign or HelloSign for the investors?
Yep.
Yeah, DocuSign.
Okay.
Yeah.
Cool.
Yeah. So all that is, again, that front end is managed by an account manager, which is nice for some. Like we always say, like we have, a lot of clients that are doctors and people that went on vacation and gave us. So we give you a soft commitment form, right? So you're assigned an account manager. They give you a soft commitment form. You send out that soft commitment form along with your whatever your marketing strategy is. They click on that. They fill out the form. Now all of those are coming into our project management software. So all your account manager can see is like, okay, we've got XYZ investor, their email, their capital contribution. They're coming in via self-directed IRA or individual, whatever they're doing. And then at some point you say, oh, can you please send out my offering docs for signature to all of these investors along with the wiring instructions, and they do that. And so again, we've had people go on vacation and come back and have all their 10 investors signed and wired and ready to go. So that's a nice part of kind of this white glove service. We're going to have it. Again, the flip side is, a lot of people are like, I like to do things myself. I like to be able to kind of have more control over things. and have, my landing page where I can make sure that people are soft committing and doing these things. So we're going to have, again, in a handful of months, we're going to have that a blended experience where you can leverage more of your account manager, or you can do it yourself more on the portal side.
Does anybody have anything to share about investor portals that they've used that they love or hate, so that we can include or not include those things in our build out?
For probably 5 years. They have a roadmap every quarter to come out with some enhancements. They do some of the ACH stuff that's an upsell. So like I would pay an extra $50 a month plus like $1 per ACH, for the investor. They have the base platform fee of something like this, like $200 a month that you're paying to use the platform. But it's got all the documents in there. It's got HelloSign. They integrate with parallel markets for the accredited investor letter that's good for like 90 days. And then all my communications, I'm able to go into the portal. I do one communication for that particular investment. It populates their name and it sends it out, and it keeps it in one spot. The K1 gets uploaded to that one spot. So they got one login. They've got all their signed documents. They've got, all the regular tax documents. I do the communication through that instead of some offline thing and doing, the blind carbon copy thing. It's all, pretty much set up. And then, all the HelloSign, all the workflow stuff is included. But the first few years it was kind of rocky, but over time it's gotten better.
I use Cashflow Portal. I have used Syndication Pro as well. And I agree with you with BestNext. I'm in a deal with that. I think that's too much. Not something for me. But I like Cashflow Portal's interface with the user. It's there, easy to use.
Yeah, we've heard the same thing, and I like their portal too. It's like more intuitive, right? Compared to like InvestNext, you look at it, you're like, what the hell am I doing? Like, what do I click on?
InvestNext on one thing. I just could not figure out how to send something to my investors on there.
We use Cashflow Portal. We've used Juniper Square in the past. We switched to Cashflow Portal. Love the interface. Customer service is fantastic. And
it is fantastic.
Anytime we have a recommendation, it's usually spun up and out like a week. Like they usually are like, that's a great idea. We'll push it out. Where usually it's like, hey, we'll do that next year. We'll use it in a few months. And they usually are pretty nimble.
Yeah. Very cool.
Who was that?
Cashflow Portal.
Cashflow Portal. Okay.
Anyone else on anything they don't like? That's what we're trying to avoid.
Well, I was interested to listen to Jeff's assessment of Syndication Pro. I've had a terrible time.
That is probably the most glowing review that I've ever heard of Syndication.
I put in trouble tickets with those guys. They've gotten on the phone with me. It's like, hey, this isn't working right. They get it fixed in a week or whatever. So there have been issues over the years, but in general, it's been pretty good. But I use Cashflow Portal for one deal. I use Appfolio for another deal. I have like 8 logins to these different portals, and we're trying to avoid that for our investors. One-stop shop and something simple, for what they need it for.
Yeah, that's what we're trying to solve for too. It's like, okay, if you're going to be a fund manager committed to it, it's like you can host all your deals on our one platform. Your investors only have to go to one platform. Like that's huge. All of us in here probably have, either as a passive investor or a capital raiser, we've got 3 or 4 portals we've got to log into, and our investors are doing the same thing, and it's a mess.
Yeah, that's what's coming from my investors. We use that for my deal, and they were just like, what is going on? Like, I can't even know how to navigate this. It was like hard to send out stuff to investors. Just flow was just.
It does everything. You just can't figure out how to do it.
Figure out how to do
it. I'm pretty sad.
Sorry to interrupt, but it's time for Group C to go shoot.
Oh my.
So if anyone who's in Group C, the food is happening right where the food was. There's a mandatory briefing card.
Awesome. Thank you guys. Appreciate all your time and the feedback.
Again?
Yeah.
So